The rupee may have had some bit of a bounce back today, but overall, it's not been the best performing currency. What do the IT companies do in a scenario like this? Rosto Ravanan, CFO of MindTree, joins us right now to talk about that. Good having you, Mr. Ravanan. Thanks so much. How has the rupee weakness impacted you? Do you hedge yourself against the currency fluctuation?
Typically, a 1% change in the rupee leads to somewhere between 0.4 and 0.5% impact to our bottom line. Like you said, over the last few weeks, the rupee has depreciated significantly. To that extent, there will be a benefit to the bottom line. We're waiting to see where the rupee ends today because a lot of the accounting calculations get done based on the closing rate of the last day of the month. So let's see where it ends today. But by and large, the weakening rupee should temporarily be a small boost to the bottom line. On a medium to long-term basis, we are worried that the amount of weakness the rupee has seen will lead to inflationary pressure. So therefore, that will lead, to pressure on our salary front. But as of now, we believe that the weakening rupee will be a short-term benefit to our margins. Our hedging policy has remained constant from 2008, no changes to our policy. We hedge 50% of our net exposure on a rolling 12-month basis, and that same policy that's continuing even going forward. No plans to change our policy.
Right. You just mentioned that the rupee weakness will boost your margins. There is a sense in the analyst community that MindTree will post strong margin growth this year. Your comments?
I think I'd like to leave the question on the currency aside for the purpose of this discussion because that's outside our control. And like I said, it's somewhat of a mathematical equation that for every 1% change in the rupee, the impact to our bottom line is approximately 0.4 to 0.5%. So let's leave that aside because we'll have to wait and see how markets move on that front. Excluding the impact of currency from an operational perspective, which is what our focus is on, we think we'll be able to improve margins by anywhere between 1 to 1.5 percentage points this year. Our full year margins for last year were a little less than 16%. I think on that basis, from an operational perspective, we've put in place a few measures, specifically around increasing the number of campus graduates that we take on this year, improving the utilization of our people this year, and similar such operational measures are being put in place, which we believe should possibly help us to get a 1 to 1.5% improvement in margins this year.
Before I let you go, really, NASSCOM has stated that they will wait for 2 quarters before looking at guidance. Lots of software majors have cut their guidance. What's your sense? Would the industry experience a slowdown?
Difficult to tell right now. I would say if you look at the picture within the Indian IT industry, there are a few large players who are sounding very, very confident. There are some of the mid-sized companies also who are sounding very confident. So therefore, I think it will probably be a situation where maybe some factors are company specific, which is leading to some weakness for them. Like NASSCOM has said, let's wait for a couple of quarters. So maybe by September, October would be a better time to revisit this and say whether the industry as a whole will live up to the initial expectations of 11 to 14%, or is that any change to those projections warranted? I think it's too early to tell right now.
Thanks so much for joining in and giving us that perspective.